following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour. Oh boy, with your humble host, me. Once again, into the breach do we go, dear friends. And of course, every day we get together here about this time so we can talk about what's going on in the markets. And where's my little thing? There it is. I almost almost forgot to start playing it the last couple of days, but by popular request.
The following takes place between 2 p.m. and 3 p.m.
And we've got a very interesting market out here. And probably the most interesting thing is I feel like Christmas has come yet again in just, 17 days, something like that. Looks very interesting. Why do I think it's Christmas? Because I thought that the market had left without me yesterday. We got a position that I thought had very good risk reward. So far, it's paying off for us in the daily newsletter. I don't think that anybody wants to be in a medium or long-term position, at least today. I think that there will be a time for those bigger positions. Right now, looking at positions where I can take and get huge returns for almost nothing. And that's why I think maybe it's Christmas today. We also have pretty much some positions where if the market does nothing, we make money. If the market goes up, we make a lot more money. And I like those kinds of positions. Chances of probably losing any money are fairly light after the downside that we had yesterday. Now the question is whether or not we can get that upside. We've got a lot of people piling on short once again in this marketplace. And the question is whether or not they can hold this market down. Volume of 2.9 billion shares, so volume has picked back up again today. Options that tell us that we should expire somewhere around 1970 on the S&P cash. That's why I was kind of worried that maybe we wouldn't have it. I was hoping that we'd get some kind of low in here on Tuesday or Thursday so that we could pick up options. But there are options out there, at least calls, where they are pricing just the chance of 1% higher in some of these equities or ETFs at 5% or less. They're basically saying there's absolutely no way the market can go higher. And what does that mean? That means if they do go 1% higher, I'm probably going to make 10 times my speculation in the calls. So I really like this market. It is lining up for a huge asymmetrical return. Let's say that there's a 50% chance that I am right and I get that return. I get to 10 times my original bet. So I've got some new option positions where I will lose 1/3 of 1% of my portfolio if I'm wrong, and make 3% enrich and engorge my portfolio if I'm right. And I tell you what, it's hard for me to say that you wouldn't get just a 1% higher move in one day in this market. And that's pretty much all you need. Now, everybody's trying to sell that down, but I tell you what, everybody is, especially when everybody gets incredibly pessimistic, is when you get these rip your face off kind of moves. It's also options expiration. And at least from watching what the options are doing, I think, 1975 on the S&P cash would not be out of the realm of possibility, especially when I start hearing news that kind of runs like this.
Governor, the city's in flames. The National Guard's powerless to deal with the situation. The dam is threatening to burst. The airport has been seized by terrorists, and the nuclear power plant's about to blow in seconds. Governor, what are we going to do?
That's pretty much it. One of the best clips ever for one of the best movies ever. Kentucky Fried Movie, 1976. I laughed so hard I threw up in the theater. Probably not a movie for everybody, but one of the funniest movies of all time. And of course, that's the movie trailer for That's Armageddon. I was talking to Andy Heck last night. Oh, and congratulations to Andy, unless these are late. He is now the chief market strategist for Cardin Capital. I guess we had him on last week. Maybe he said that he was last week. Maybe I didn't miss it. But congratulations, Andy, for your new position. I hope he will just remember the little people like me as he becomes one of the big chieftains of the stock market. But that's it. Anyway, I love the setup in this market. As I look at the VIX and the way that the premiums are coming out of this market, I love it too. At worst, maybe I lose a little bit of money. At best, I make a absolute gob. And you can't ask anything more from a trader than that. A lot of traders work like they're working daily for an hourly wage. I do not. I love it when opportunities come to me as they have today. And I have an embarrassment of riches. We talked last week about, or was it last week or this week? Yeah, it was last week, about the best poker players and the mentality that these poker players have. And that is, do the right thing, whether you get paid off or not. Reward yourself when you do the right thing, not when the outcome comes out the way you want it. So I think I'm going to probably go out and have a nice dinner tonight and reward myself at least a little bit. Go out, find the Chicky Poo, and go out and have a little bit of dancing and good times. The market can be somewhat random. And the only thing that I've found to do is make sure to put my money in when everything favors my play. And I love it when everybody gets hugely bearish in a market when they weren't bearish a week ago. And I love it when everybody piles on short, because that means that we can have rip your faces off for higher rallies. And I love it when options basically say there's zero chance that the market could go higher. Most of the time, they're going, well, maybe it's 50-50 or something like that. If there's a 5% chance that at least some of these ETFs can go just 1% higher, I think that they're throwing money away. But I have a feeling a lot of people are just despondent, and always a good time to cover your shorts when everybody is horribly demoralized. But as we say, watch out when the dam's busting, the nuclear power plant is melting down, the terrorists have taken over the airport, and the end is nigh. In fact, I talked to Andy about this last night and tried to get him to watch that film clip on YouTube. If you just Google YouTube, That's Armageddon, I think you will like it. Very 70s kind of vibe, but I loved it. Anyway, when we get back, we're going to get into histoire and get into charts and a lot of other stuff. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. We're off 7 points on the S&P cash. Of course, we had a nice, huge pop out here to 1947. And we're getting everybody incredibly bearish on the sell-off out here today. Volume is good at 2.958 billion shares. But again, as many other days, a lot of volume in the main indexes, not a lot of volume in the individual stocks themselves. And I could be as bearish as possible. I'm just saying that probably if we're going lower, it is a very small number. If we're going higher, it's probably a much bigger number with all the people that are short now. By the end of the day, could I have wished that maybe I hadn't spent 80 cents on ill-gotten calls in the market? I guess it's possible. But I continue to see the same setup that we had going into September on that Friday, where everybody was absolutely screaming bloody murder. And what do we have? What was it? 1880 and ended up, what, 1950 a day? I think that could happen. We had a very good question in the den, and that is, do I see a bottom in oil? And the answer is, I hate markets where everybody thinks that there's always a V bottom. And in fact, we were talking about Andy Hecht earlier. We were kind of texting back and forth last night. I said, you know, for a really great article for Seeking Alpha stuff, the question would be, what makes a U bottom and what makes a V bottom out of crude? It is my personal opinion that if you've had anything go from $100 to $10, the chances of a V bottom are very light. You may get a short squeeze out there, but that is not some kind of long-term trend change. You are much more likely to see a automatic rally that is just about probably unplayable. You're lucky if you get it, let me put it that way. It's put together as Jesse Livermore and Richard Wyckoff called them automatic rallies without preparation, without a hint of them coming. You can jump on them for a few days, but you better get off. After you've had massive destruction in a market, you can go sideways for years, much like gold. And that is why I suspect that you can see U-bottoms in things like gold and other commodities. I am not expecting them to flip on a dime. Can you make money on them, trading them in the very short term? I think so. If you're looking for a long-term trend change, that comes with consolidation and boredom. And I do not see the boredom and outright desolation of the markets to tell me that that kind of low is in. But again, have markets done V's without me? Yes, they have. But again, you know, I am much more likely to buy something that has done a Lazarus pattern, that is, acted like it's dead for longer than 3 days, where I see, you know, the first sign of life, then it comes back down on light volume. To me, those are better markets, and or markets where I see somebody's been accumulating the stock underneath it and has been flat for that reason. I don't see any reason out here. I don't see any fundamental reason that says crude is in a V market, other than maybe a shooting war in the Gulf, and not the Gulf of Mexico. I'm talking about the Gulf over there in the petro-producing Mid-East. And so that's it. I just don't see a great deal out here. I do love the huge and massive despondency I see in the market. I also love what I think is a lot of late to the market shorters in this movement down today. And I still think that by Friday, we probably have a close somewhere around 1970 to 1975 on the S&P cash. I'll update that as we go through the rest of the days. But everything I see, you know, we could have it much higher than that. I'm just saying that I think that there is 80% probability that we close Friday at 1970 or higher, which is pretty good. I think there's only a 1 in 5 chance that we close lower. And I love this market out here. In fact, I would love for the market to maybe even go a little bit more sideways tomorrow and give me an opportunity to buy the most despondent of people with calls that think that the market couldn't even go 1% higher. Man, you could go 3 or 5% higher or lower tomorrow, and I don't think anybody would truly be surprised. This is a violent market, and a lot of people just, I think they think that that bear markets are one way down. And normally the best time to actually short in a bear market is right after a huge rip. And I think that's what a lot of people thought, that, you know, just the move 50 points up off the bottom was it. But you normally don't get that. Again, the markets, even in a bear market, tend to be going up, even if this slightly 3/4 of the time. It's with those wicked times on the downside that you have to be, you know, ready for. And options for 50 cents or $1 that with the possibility of paying you $10 back at a 50% probably move. I like the odds. Yeah, maybe I've got a 50-50 chance of winning, but I got a 10-time payout, and that's pretty much what I love. Anyway, as we get this party started,
That it's all just a little bit of history repeating.
it is history repeating. On this day in 1914, Henry Ford announces he will share the Ford's Motor Company profits with its workers by raising his wages from $2.34 for a 9-hour day to $5 for an 8-hour day. He hopes his workers will be able to afford their own Fords. Within 2 years, Ford goes on to produce its 1 millionth car, and it's able to keep the union out for many more years, which is really the reason he raised it to $5, to make sure that you keep the union out. But at the same time, being able to buy your own car was kind of an interesting idea, in that you needed to have a market, and actually your own workers are probably a good market, just to say that. And of course, in 1914, a lot of people could have gone to work in the armaments business over the next couple of years as World War I really takes off. and wages probably actually very good at the time. But that's it. And I guess wages were good unless you were Jewish, where he didn't quite like it. Pot him. Anyway, I love this market. I love it. I love it. I love it. Again, we can continue to talk about the subscriber event. If you do subscribe to either one of my newsletters, you can get in on the January 20th. I'm working on the second half of my white paper on shorting, and hopefully that'll come out in the next few days, probably Friday maybe tomorrow. Depends on how much I get done between now and the time that I go out partying, but that's it. We've got Ben in Tallahassee, but not enough time to get to him on the S&Ps. We'll get to him on the other side. Make sure to go to the front page of TFNN. You can sign up for free for 30 days to either one of my newsletters and get in on the subscriber event, my theories on shorting. And on the other side, we'll talk to Ben from Tallahassee, Florida.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to go to our caller. If he's still there, Ben.
How you doing, David?
Fantastic.
Great. What a wild day, huh?
Yeah. You know,
Yeah.
I guess it's what you get used to. And, you know, when I started, my full first time within 1 month. We had the long-term capital management debacle, and I think we had a 1,000-point range in the Dow, something like that. It's kind of like about a 1,500-point range today, or maybe even more in November of '98. I just always thought that that's the way the market should be. And, of course, at the height of the dot-com, and everybody was making money, and I thought I was brilliant. And the market always comes back to humble you after at least some time.
It sure does, especially when it has a closing and an opening time, right?
It certainly does.
Yeah.
What can we do for you today?
Well, I'm looking at the both the S&P and the Dow, and it sure looks like a light trading day. And I'm trying to figure out if I should look at that as a bull or a bear, and I'm siding on the bull side.
What volume are you looking at?
Well, I'm looking at, let's see here. I'm looking at the Dow.
Okay. Let's do something
Dow
else.
daily. Yeah,
Let's do something else. Since I've got overwhelming evidence that the indexes and at least to some extent the ETFs are nothing but fields of fire for high-frequency traders. What if we look at something where it really costs you to go after something like, let's say, Apple or Amazon or the rest, where there may be some high-frequency traders in there, but probably not a ton. Do you see the same kind of volume when you dive into the individual stocks in the Dow? Not all of them, but on whole. And if you looked at the NASDAQ stocks and a great deal of others, what do you see there?
Well, let me take a look at Amazon. See what we got.
I'm going to tell you that as far as a market, when we start really moving, it has not been one of these markets where I see anything like huge volume in it. Let's take a look at Amazon. This thing gapped up on huge volume back on the 23rd of October, right? 10.7 million shares. Okay, yesterday we had 4.8 million shares. Today, a little bit of a pullback, 3.2 million shares.
Right.
Okay. I'm going to tell you that you can focus on the indexes, but they are nothing but a field of fire for high-frequency traders. They started coming back late in August after being off for maybe 9 months or a year. They got the market.
I'll tell you that there's one reason I stick with the indexes, because I got burned 2 or 3 times from company earnings reports. And what I find is that unless you stick with those crazy earnings reports and you're a true trader, you almost got to get in and out of those trades.
I'm telling you that you need to. If you're I'm going to say that if you're looking at the Dow, you need to look at all 30 stocks instead of looking at the Dow. You need to go through those at night.
Oh, right.
If you're talking about looking at the NASDAQ, I'm going to look at probably the top 30 stocks in the NASDAQ. If I'm looking at in the S&P, I've got to go now, dive back down, and go into maybe the top 100 stocks of the S&P 500.
So I think what you're saying is that you don't have a problem buying the different indexes, but you dig into the portfolio before you make a decision.
Yeah, if you look at what is known as the floor traded volume at the New York Stock Exchange, it's going to be maybe $1 billion or $1.5 billion or something shares. If you look at all the stocks traded on the ECNs outside of it, where high-frequency traders get to trade for 1/10 of the price of the New York Stock Exchange floor, you got 4 billion, or last week 4.8 billion shares. Only about 25% of those actually went through the New York Stock Exchange.
Yeah.
With it being so incredibly cheap, it is easy for high-frequency traders to go out there and make individual markets for milliseconds to minutes and really rip through huge amounts of stops up and down, everything else, and you get the illusion of lots of volume without the effect of lots of volume. In the second half of the show here, I'm going to go through, I think I had another 50 or 60 pages of charts this morning in the newsletter of stocks testing lows with lighter volume. But, is it big, as nasty as everybody believes this market is? Is it surprising to see everybody hop on it on the first bounce, not give it even a minute, but just pound it with shorts this day? I don't think the answer is no. I think the answer is yes. I think you get everybody wanting to dive in on a market, especially people that haven't seen a real nasty bear market in, 6 years, 7 years, to absolutely do the wrong thing at the wrong time. The time to be shorting this market was in the last week of the year. And I think now everybody is coming to the party a little bit late. Normally, when I want to reshort will be when all these people give up shorting. And like I said, go ahead.
Do you look at the VIX at all? Because what I did find today is that on the dips, what kept me in a bullish position is that the VIX really didn't go up much.
Yes, I think you are reading it correct. I have on the top of my charts the UVXY, and I mean, what do you have? That thing went from $49 to $40 in 2 hours, something like that yesterday. Today it's still off $2. It's telling you that there's a whole lot less premium to the downside than there was just yesterday by a factor of 20? Is that right? 25%?
Yeah.
So, I don't see a lot of people piling all over that again. Again, that's why I say that the downside is probably limited. If you can use options, your chances of the market going up, let's say that they're just 50-50. But again, like I said earlier today, they were priced, a lot of them were priced in the last couple hours as if there was just a 5% chance that the market, or at least those bigger ETFs, could go 1% higher. It was literally ridiculously cheap, and I had to pile all over it. And again, over the last 20 minutes, I had a bunch of orders in. I checked them during the break, and even a few more of those hit. So I've got a lot of upside to this market with very little risk, and I think that would be the best way of playing at least the next few days until we see how this market sets out.
So what you did is you've got bullish options over the next short term, like the next week or two, that you're
till Friday.
Till the end of this week. Okay.
I think we could bounce 50 or 60 points. If we do, all I need, and a lot of, like I said, the options were so ridiculously cheap. I'm trying to remember, I don't know how long you've listened to it, but we went through a horrible October I think
I bought some diamond options this morning too, so I'm with you.
I think you'll be okay.
Yep.
Just to make sure that you have huge risk reward.
Oh, yeah.
And I think it's good.
Good, David.
Thanks for the call.
Yep, see you.
Be back in just a minute. You have an opportunity to call me at 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And before everybody goes off the deep end, I do want to remind you of my cardinal rule, and I try to put it in every newsletter. I don't always remember to do it, but before you go nuts, options are there to reduce risk, not add more. So just because you could buy a ton of options at $1 or 50 cents or whatever, doesn't mean you should. It means that if you were going to buy 100 shares, then maybe you can buy one option if you were using your standard risk reward. The thing is, of course, on these last minute options, you could lose. So you need to be able to know what you're doing, and you need to watch the market develop. I got a bug chasing me. You need to watch the market develop. And of course, I've been doing this, I don't know, 14, 16 years or something. Just in options, playing options expiration. So it's not something that just happens overnight. I would recommend that you at least maybe play it on paper for a while if you are new to it. We've talked about and done webinars on it before. But the idea is not to go out and throw all your money away on basically what can be a lottery ticket. The idea is to use intelligent speculation and make sure that you have a huge asymmetrical risk reward in the market without putting in a lot. I would just checked out there. I have about 1% of my portfolio in options for Friday. They would pay me back about 9% if they all hit my targets. So I can take a very small 1% chance out there for a huge risk reward. And like I said, I need 1975, 1980 would probably give me everything I want in those. And we've already put at least one out for the subscribers out today. And we have some other options and other positions that are set up that all the market has to not do is go lower. And in fact, if it goes higher, we make even more money. So pretty neat position this week. Like I said, it's a gift, I think. If it's not, I will have a smaller but useful loss, and that will be one more loss before I go to one of the big asymmetrical wins. Anyway, as I said, you need to be watching markets out here and watching stocks themselves. I'm not a big fan of looking at these markets that are now being, and in fact, some of the ETFs hugely drawn in the market. But we'll just go through a handful of these that were in my newsletter this morning. That is ANSYS, ANSS. Not a bigly wide-known company, but against its August 24th low of 880,000 shares yesterday with what? 270,000 shares. I'll take that bet. Other things, C&Q. We're breaking previous lows, you needed 11 million shares. Maybe this is not one for you. I would have liked to seen a lot lighter volume today. It has broken the August 24th low. Volume is probably not going to break the 11 million shares that we saw in CNQ, but guess what? It's not probably going to exceed it. Edgewell, let's take a look at some other stocks out here real quick. Here's the one I liked that made me think that maybe we're going to get a little rally out of the Asian Pacific part of the market, and that is the Pacific ex-Japan EPP ETF. The August 24th spiked down $35.05, 1.8 million shares yesterday, 680,000 shares. Today, pushing it down, but just 500,000 shares. This is not pushing these markets down with heavy volume. Again, a lot of different stuff going on here. Let's take a look at some other stocks. Harman International, well-known company out here. 1.6 million shares on these. August 24th low, $84.06, 1.6 million shares. Half of that yesterday on the 11th. 880,000 shares, just 366,000 today. So even though they are pushing it back down, not a lot of participation out here. And as I normally get into these modes like we did in September, I can do this all day long. Huntsman Corporation. This thing got smacked down 12 million shares. September 29th, $9.27, 12 million shares. We've broken through that with 3.7 million shares today, and yesterday 5.4 million shares. But I mean, these are not stocks that if I was short, I would be holding my breath on for more profits. We are breaking lows with a lighter volume, and normally that means you're going to get a nice pop up. iQor shares, IEMG, this ETF hit the low on August 24th. $36.51, 16 million shares. We're into it now. What, a buck lower than that yesterday. But again, half the volume today. 4.6 million, 4.7 million shares. I don't see people tumbling into this market with a great deal of these stocks that should be able, if we were going lower, to blow through these lows fairly convincingly. KLX, another stock that's been hit horribly. November 18th low, $28.35, 1.2 million shares, just 500,000 shares yesterday. Today, just starting to move back up. Not a lot of interest yet, 470,000 shares. This thing could probably pop back up to that $31 level where there's an open gap. LKQ out here bouncing along support with fairly light volume. This thing gapped up with 6.5 million shares back on March 30th of 2015. Tried to hit it with 2.5 million shares August 24th. And, of course, got back into it yesterday and today, 1.8 million shares. So actually not bad-looking charts. I don't think that they're going to do anything more than bounce and then make another run at these lows. But I think maybe you got 5, 7, 10 days, something like that, where we may see these things come out in the lows. And as long as you have your risk defined with options, I don't mind it. August 24th, $22.64 on Live Nation. I got to sneeze. And I'm back from sneezing. Sorry about that. I get the air conditioning right on the back of my neck here in the studio, and that's it. Air conditioning isn't on today, but for some reason I'm still getting a little bit of a draft. August 24th on Live Nation, we said 2.4 million shares on August 24th, $22.64. We basically pierced it yesterday. What a beautiful one. 1 million shares against the 2.4 million shares. Got a little doji out here today. But there's a nice little gap up there, about 24.50. Could it bounce back up there with no problem? I think so. NTRI, Nutrisystems out here. Talk about some stocks that look like maybe they're fairly decent support. This thing gapped up with monstrous volume on the May 1st of 2015. 2 million share, is that right? 2 million or more. All right, 2 million shares. Yeah, 2 million shares. Got back into it with 2.2 million shares. You know it's going to get retested. That was on October 29th. But yesterday, the proof of the pudding was light, 600,000 shares today. A little bit more volume, maybe, 900,000 shares. But still, probably finding some level of support. We've got more to go here in the last segment. You still have time to give me a call or email me at path@tfnn.com or put a message in the den. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. We're going to go to Paul in Fremont, California. How are you doing today, Paul?
I'm doing great. How you doing today, David?
I think Christmas came early this year.
Right on. Congratulations. Good job on that one.
Well, we'll find out. But I think I did the right thing. Now we'll figure out whether or not I get paid off on it. What do you want today?
Well, I'm looking at the UVXY, and I've been playing this quite a lot lately. I got out a little bit early the last run-up we had, and I was just wondering if you see any targets to maybe re-enter. I'm looking around the $31 range, $31.64.
I would think probably $26.
$26, huh? You think it's going that far down?
In the bear markets that I've been in before, everybody gets short. As soon as everybody quits shorting, the market goes back down again. I mean, if you listen to my shows going into Christmas, I said just how vulnerable the markets were because shorts would start covering into the very light volume going into Christmas, and that opens up the biggest downsides to the market. So for me, you need to buy and only buy highly leveraged products like this when they just really can't go much lower, right?
Okay.
And to me, you can lose an eye or a leg fairly easily trading this. I tend to only want to buy this when I can get into it right. I missed it last time. I wanted to get into it. Maybe I was being just a little bit too skittish on it. But again, didn't really give us a lot of opportunity or a pullback to get back in after the first of the year. But to me, I would love to see this thing maybe even go into next week and pull all the way back and have everybody believe the market's going back up higher. Nobody wanting to have any part of shorting, all the shorts screaming for their mommies. And then I know that there probably aren't a lot of natural buyers on the next leg down. Now, the pros are probably still going to buy, so maybe you don't get it down there, but I would wait until this thing has maybe a couple of days where it just goes sideways, maybe at that 25, 6, 7 level, and you get some kind of signal out there that people are done shorting, and that's when the market is going to be the most vulnerable.
Yeah, because this one definitely could rip your face off. I got out a little bit early, but I'm glad I did because, man, the market was barely up yesterday, and it just gave up, almost 10 points.
And this is a great example of an ETF where you must sell when you can, not when you have to.
I heard that. Well, thank you for your time, David. Have a great day.
You bet. We were going through stocks before this, and actually we had a request in the den to look at Rio. And the question was, where's the bottom in these things? The question is, a lot of these miners out here, it looks from a lot of the articles I've been reading lately, that they are really not welcome at the lending window. That is banks, anybody else. They're really the same people that lend to these guys, lend to the people in the drilling and crude markets. And these guys are getting absolutely hammered. They don't have cash for these guys like Rio Tinto. So the thought is that these people will have to issue more shares, and that means that who knows how low this is. It depends on how many of these companies start throwing out more shares into the market to raise cash, as it will not be easy for them to get cash at all. We're seeing, I don't know, the JDST, I mean, what a run here from about 22 bucks up to 32.46 today. That is kind of the broad paintbrush that is hitting all these miners, especially small miners, people that don't have a lot of assets. So you really need to see whether your miner may need cash in the next year or two, because people are starting to think they're going to sell more shares to raise cash. We'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.